All right, hey, good afternoon, everyone. It is 2:15. Market's been closed for about an hour, and let's just jump right into it and look at what the market action is doing. There's not a whole lot of new fundamental news. We're waiting on information from the Pro Farmer Tour and some of the other tours that are out there. Who knows how the trade will react to whatever those tours are. What matters is what the USDA ultimately says. But we know that the heat wave that's been impacting beans more than anything else is severe, and the crop is tight already. So honestly, we're a little surprised that beans haven't rocketed on up out of here. But if you look at this setup, we're poised to pretty well. So if you look at this downward move, right, and you think that that's an impulsive move down, then this is all corrective. But the problem is that if we're back up above this base channel right here, then it's not corrective and it's something else, which means that this would have been the corrective move because, as I've showed you before, it's actually in parallel lines. So you got a wave two, you're holding above the daily cloud, and now we're reversing back up above significant resistance and support. This is a new high move or a new high close for the move up from 1280. So that's not insignificant. You've got a big reversal bar here today, and I would expect that these highs up here at 1381 be challenged, which opens us up to new highs up here in this 1430 range. Will we go higher than that? Who knows? If we drill down to a shorter time period, and we want to see something else that's interesting, we're holding all of our clouds, and this move here is also this counter move right here from the gap open Sunday night. This is also contained within parallel lines to the downside. It never could break out the bottom of this base channel until today when we rocketed up through it. So now you've got the challenge between this base channel that is off of the low down here at 1281, and this one as corrective. This one's already been blown up, so now all we got to do is come back up above, let's call it 1370 for a nice round number, and you should see beans really accelerate to the upside in our opinion. So we like beans for higher. I think that's supported technically. It's also supported fundamentally. We're just waiting on the trade to kind of jump on board here. I think beans have been impacted the last few days with better than expected yields in some of the fringe territories, but also the dollar strength and just a lot of selling across meal and oil, and just a lot of money flow that's moving to the sidelines. But it doesn't matter how low or how high our dollar goes. If our beans get so tight that we're projecting a negative carryout, we have to ration anyway, which means higher prices. So we'll stay tuned, and we're going to stay fairly optimistic on soybeans. All right, so wheat is the next market that's really got our attention. We've been looking at this thinking that we're at or near a low, but every time the market rallies, it just gets smoked, right? And there just seems to be big sell orders sitting right up above the market. But wheat has gotten itself into a large short position. It's running out of time to buy acreage, and we've got a situation where a move back up above 775 or 780, which would be this high right here on August 11th, a move back up above that high could really bury some shorts and put pressure on them, which could create that short covering rally that we're looking for. So we like wheat here for higher as well. I don't see any reason for us to turn bearish from these levels. If we drill down deeper into the shorter term time frames, you've got a lot of exhaustion coming off the lows here. We finally have reclaimed the top of the 4-hour cloud, which is the first time we've been above it for several weeks. And if we drop down even further to the 60-minute time frame, you can really see the explosion start to unfold here. So this, I think, is forming a flag right here, which we would expect to go ahead and accelerate out higher. What's going to drive it higher? I don't know. Maybe the monsoon in India and the absolute drought that they're in, maybe the drought in Argentina, maybe the problems in Australia, could be the lack of wheat crop that we have here, and the global dwindling wheat supplies against rising demand. It's really been amazing that wheat has been resilient enough to hammer itself down here on the belief, really, that supply is abundant out of Russia. But that's not true, because Russia is $1 more expensive than we are, and other countries are looking for wheat that needs to be bought. So we're cheap. We're undersupplied, and we've got a lot of reasons for this thing to explode higher. So I don't think you want to be a seller of wheat down here for any technical or fundamental reason as of now. If the market comes back and reverses here below these lows, then we have to scratch our heads and say, hey, we're going to come on lower. But if the volume doesn't pick up, then you're just going to see divergences start to form, and that's just going to make the short covering rally even more powerful, in our opinion. So a lot of patience and a lot of reasons to be on the patient side of wheat. Corn, not a whole lot different. In fact, these divergences are some of the most extreme that you will find on any market, especially on the corn market, going back probably to 2007, 8, and 2012. You're not going to see divergences as distinct as these. So I think something is coming in the corn market. I don't know what it is, but I really like the action today. Somebody or some fund is just hammering corn up above $5. Obviously, there's a big position here that's trying to get unwound. But if we're able to break back up above these highs, then Katie bar the door. I think corn is going to be due for an explosive move higher, if that's the case, off of these because of these divergences. And again, similar situations to wheat. We're cheap. We're cheap relative to every other market in the world. There is not an abundance of corn. There's actually an extreme tightness, and there's bullish fundamentals all over the world regarding feed demand and also energies. So with that, I don't think that we want to be sellers here on corn. I know it's nerve-wracking under $5, but I think you got to play the long game and just recognize that, hey, we may have already bottomed this market out and priced in a crop of 175. And if that crop starts to get lower and or demand starts to pick up, then our balance sheet comes right back to that 1.5 or tighter area, which puts us back up here near the highs. So we're not pessimistic corn. We're actually bullish corn. We're bullish beans. We're bullish wheat. And we're going to stay that way until we have a really, really good set of fundamentals that line up with technicals to the downside. All right, that's what we've got for Wednesday. Obviously, this is our opinion, and it's subject to change based on market action, right? But that's where we're at as of 2:30 on Wednesday afternoon. And if you're trading these markets, remember they contain significant risk, and you should only do so in light of your own financial condition. Hope you guys have a great Wednesday. We'll be back with you tomorrow or Friday, depending on market action and what communication is needed. Otherwise, stay tuned. We're going to be coming out with some potential bean reownership strategies if you're short beans and need to look higher. I think that this heat wave could easily take us and get us too tight where beans have to explode higher. So we're going to look at some option strategies that reopen that upside for you without exposing you to a ton of risk to the downside. With that, I hope you guys have a great night. We'll talk to you soon. Thanks. Bye.